answer to that question, yes, silver got trounced. However, I think it is a buying opportunity for those who might not have been in the first move. And I think that we're still going to probably $300 to $500 silver this year, and probably much of that occurring by summer. As crazy as that sounds, it is not crazy. There's many examples of other markets doing similar type repricing to a new reality type events. Silver has all kinds of arguments for it, both technical and fundamental, that favor that sort of rapid readjustment. So our assessment says, yes, full thumbs up. This is a buying opportunity, but most of the drop is literally within hours. Okay. Now, people thought, that's it, it's over, done. You don't have that kind of drop without a top. Our work says no, you did not break anything except sentiment. Long-term momentum trend factors are not even near points of structural breakage. Whereas in the past, when we made tops, 2011, for example, or the low in 2015, there was ample structure on momentum where you could look at a momentum chart and say, oh boy, you break that line, you're going down. Oh boy, break that line, you're going up. We don't have any structure nearby. And whenever you do not have clear bridge over the River Kwai type structure to blow up, to break down through, you probably aren't at a top. And almost all tops, I'd say 95% of them, have clear momentum structures that when broken, then you later find out price joins in. If you put silver on a logarithmic scale and add it to the top, it says $500. Why? Because the low of that range was $4 or $5. The high was 50. That's a tenfold dimension gain from bottom of range to top. Add tenfold to 50. Okay, enough reasons, right? Okay. And usually these changes in reality where a market says, I did something wrong for a long time, I'm going to adjust it. You have a tantrum. You don't do it incrementally, crawling all your way up. You suddenly burst to correct for the error before. You often will overdo what might be justified. So if, let's say, 250 or 300 is fully justified, then maybe they overshoot it. It's typical of markets that are correcting for excess. Having lived in a half a century range between $4 and 50 back and forth for a half a century, while nothing else did hardly. Copper didn't live in a range that long. It lived in a similar range as silver did for 50 years. It remained in a range from the 70s, 80s, 90s, 2000 into about late 2005. Copper said, oh, I'm no longer going to live in a 50 cent to $1.50 a pound range, which is where it lived. Instead, in a couple of quarters, it went to $4.50. Bam. Okay. No particular nuclear reason for it. It wasn't in sync with gold or silver at that point. It wasn't even in sync with other base metals. It just said, I'm going to a new reality. A couple of years later, in 2007, lead did the precise same thing. Lived in a range for decades and decades. Said, oh, I'm out of here. Boom. Quadrupled in nearly a couple quarters. Look at the price relationship of silver to gold, for example. It's ridiculously low historically. In fact, last year, it was down 1% of the price of gold. Divide an ounce of silver into an ounce of gold. 1%. Okay. If you go back and look at the bull market surge that peaked in 1980, in fact, for a period of time there, not just a spike, it was at 6.5% of the price of gold. Okay. Then in the 2011 bull market, 2010 to 11, the latter part of that bull market, silver was over 3% the price of gold. So last year it was 1%. What do you think? It's going to free? Okay. So it's popped up over 2 recently, breaking out over a massive, clear technical structure on the relative performance chart, meaning an ounce of silver divided into an ounce of gold plotted each month. And you had a very clear ceiling, and it broke through that. We did the same thing, except even a bigger and clearer base, silver relative to gold, at the close of November. So it's only 2 months and 2 weeks now into a likely couple quarter surge.
Long story short, it lost 70% of its value. You don't see that happening now?
No, I don't. If this were 6 months into the move, and if silver had reached 400 or 500 bucks or something like that, I think you would have a sharp correction from there, but not back to 50 bucks. The old reality's gone. The question now is, where is silver going to define the extreme upper end of the new reality? And I think it's going to do it very rapidly, meaning in a handful of months, not 3 years. And I think once it does, it'll probably overshoot and probably collapse from there. If you got in at 400 bucks or 500, the issue is, did you get in at a proper time? And I think happens to be right now is the proper time. You've got to pull back, use the opportunity. Most of our measurements are fairly long term when we analyze markets. We're looking for the big moves. But even when we get down to the micro stuff like daily momentum or weekly momentum, which we included in our weekend report, when we analyze that, we can even see buy trigger levels, of which, like daily momentum today, is already crossing a buy trigger level. Short-term momentum saying, hey, I'm out of the hole now. Okay. My preference right now, personal investments are, I favor silver over gold vastly, despite the recent drop. And I favor the gold and silver miners over gold as well. They have not broken out yet versus gold. They have firmed nicely over the last couple of years. The miners have beat gold, but they've been still stuck in a range of performance readings that they've been in for 11 years at very, very low valuation levels. They're challenging the upper end of that range. If they break out, you're going to get a gusher in the miners. And I suspect we're going to see it this year. Two other factors to look at. One is just simply monetary degradation. Look at an M2 chart. Go back to 1980 or 2011. See where the M2 was then. See where it is now. What's the gain? If silver were to match that gain, it'd be in the several $100s just to be where it was in real buying terms in 1980 or 2011. In fact, if you go back a year, it was 1%. Now it's 2%. That means gold in relative value to gold over a year. So while gold's gone up over the last year since early 25 to the present, silver's more than doubled, despite the pullback, than what gold has done. From the 76 low to the 1980 high, it had an 8-fold gain. In other words, if you bought gold at the low, you made 8 times your money by 1980. Then it dropped and plateaued at a much higher level than it had been before. And in 2001, it made lows around $260. And it had an 8-fold gain to get to its 2011 peak. Different span of time, 10 years as opposed to about 3, but same dimension move, 8-fold. Okay. We made a bear low at 1,050 in 2015. We're now only 5-fold above that level. And yet everybody says gold's overbought. Heck, it hasn't even matched the performance it provided in the prior 2 bull markets under far less monstrous fundamental factors in play. So even if it just matched the multiple gain of those 2 bull markets, it'd be $8,500. And by the way, we've been saying that for a year, not as a target, but just as a get back to what we've done before type thing. JP Morgan has now come out just recently and come up with the same number. Isn't that cute? This correction occurred when? At the end of the second month of the surge. Surge defined by when silver broke out versus gold on a spread basis. That was the close of November. Okay, January, February. And then it has this correction. Earlier than we expected. We thought we might get one about midway into that 6-month period. But we still think by summer you'll likely be at very high levels. But again, the key issue for investors is what was your point of entry? If your point of entry was finally, oh gosh, I believe it now, I'm going to buy it at 120. Okay, well, you got bagged. And maybe you should have been. Our buy levels were last June coming up toward 35 and at the close of November in the 50s. Those were our last 2 major buy signal levels. The weekly offers a number about $6 above today's high. If you get there this week, next week, that'll adjust down some. So even the short-term stuff is saying, hey, I'm out of the hole. Okay. So at that point, I would say if you're not in silver, join in Yeah, you're buying it off the low, recent low, but you're buying it well below the recent high. So view it as an opportunity. Nothing has broken other than public sentiment. And I argue that the drop you saw then in 1980, for example, yes, that was top of the old range. Silver just gone from like what, $5 to 50. And it had a four-fold move in the last 5 months of that explosion. I'm talking 2 quarters roughly. In 2010 and 11, it was a 7 month explosion, which doubled in half the price of silver in 7 months. Both of those surge events, still caught in that old range though, were triggered by the spread breakout of silver versus gold, where you could plot the relative performance chart and you could draw a line with a crayon and say, if you get above that line, you're breaking out over a multi-year base. There's two charts you can look at. One's arithmetic, meaning dollars on the left side. And you've got that 50-year range, and the thickness of that range is like a box, okay? It's a $4 to 50. Let's call it 5 to 50. So it's a $45 thick range. Added to the top of the range, $50. So when it broke out, your quote swing objective, orthodox method, would be $95. Look what happened when silver got up to 93 to 95 a couple weeks ago. There was a fight. There were a lot of sellers there saying, swing objective met. Okay, boy. And they got a little bit of sell off and then blew their head off, went to 121. So obviously the arithmetic scale swing objective is invalid because we went way beyond it. Okay. But if you put it on a logarithmic ratio scale, just like I was talking about with gold, if you'd put that gold on a log scale, you'd see the eightfold moves of equal dimension. And I do think that, while gold has a 3,000-year tradition as money, so does silver. Okay. And even India is remonetized silver, allowed for in bank transactions and all kinds of things. So it's not like it's a lost idea. Most people see silver as the industrial quote precious metal. It is in fact a monetary metal, has been for thousands of years, and it's being reborn because it's vastly underpriced relative to the mama. But even that price surge in the Bloomberg, for example, got up to 140 at a peak. That was still a little more than half the price level it saw in 2008. So it really wasn't, off the page high for commodities. Well, oil had a big surge, went to 130. Okay. Then it backed off hard with the Bloomberg Commodity Index in 2000, late 22, 23, and 23 to 24 to 25, like 3 years there. It just laid in the sewer, okay? 60, 70, $80, 60, even got down in the mid 50s. During that same time, the Bloomberg Commodity Index, which is what oil tends to move with, by the way, was either side of 100. So it dropped from 140 back under 100, just dead as hell. Like I'm just not going lower, but I'm also not going up. Last October, we got a major momentum-based buy signal out of the Bloomberg. And Ethereum, which a lot of people thought, well, that's different from Bitcoin. We argued, nope, this little crypto beast compared to Bitcoin in terms of size of the crypto market, we said Ethereum will follow Bitcoin. And it not only followed it, but did worse on the downside. In fact, Ethereum price levels we saw low last week were basically at the lows of the last 5 years. So anybody got in Ethereum over the past decade is wiped out. Okay. I would not be surprised to see much, much lower prices. And I wouldn't even be surprised to see it become almost non-existent. Already sentiment has been crushed. For some reason, people are surprised by it. Our momentum technicals told us, nope, it's got crash potential. When we looked at a price chart of Bitcoin over the last couple of years, it was a layered advance with a pullback and then another surge and then finally that third surge. When you looked at momentum, long-term momentum, you didn't see this upside. You saw a floor. Same level, hit. Whereas price was ascending, momentum was building a floor, like the bridge over the River Kwai, okay? And it went through at 107 and 100, just below 102,000 back a couple months ago. And that's when the crash started. So anyway, I think the vision that it is the alternative money and a competitor to gold and silver is now been crushed. And I would not be surprised to see some financial consequences, meaning companies that weren't 5 years ago anything to do with crypto suddenly got up to their hips in crypto one way or another, and therefore they're vulnerable.